Hello, everybody. Welcome to the Friday live stream. We got a lot of things to go over, so let's just jump right into it. So first of all, the title and thumbnail suggest stagflation. Pretty ugly word, especially for the economy. And what is stagflation essentially? Well, when you have something that we talk about, economic growth slows down, that's a sign of stagflation, where everything's just kind of slowing or easing down the economy. We see an increase in inflation and also an increase in unemployment. And today we got a little bit of a peek behind the curtain to see what is actually going on. And GDP came in an abysmal 1.4% here in the States. Now, previously it was at 4.4%, and of course the administration was bragging up and down the street about how much it was. The expectation was that it would cool a little bit to 2.5%, but unfortunately we saw a major drag on the 1.4%. So unfortunately for the economic, growth is slowing. The next one, the inflation, a reduction in, or inflation is actually increasing a little bit. So we can have the inflation here at core PCE. Last time was 0.2%, expectation was 0.3, but unfortunately went up to 0.4%. Core PCE went from 2.8%, and it did hit expectations of 3 as it rises up. And PCE, personal consumption expenditures year over year, went from 2.8, expectation was 2.8, and we hit 2.9. So 2 of 3 are hitting. Economic growth is slowing, inflation has increased. And if we can take a look at that economic growth, we can see over time, it was a monstrous quarter, Q3, even Q2. Q1 was pretty much weak at negative 0.6, and everybody was freaking out. But of course, that was in the Q1 of 2025. But the second quarter, we can see a major jump, major bump to 3.8, 4.4. People thought it was continue, but the market does what the market does. And the economy slows down to 1.4%. So now we're hearing the calls for stagflation. We're seeing the calls for recession and everything across the board. However, there was one more piece of the puzzle, unemployment increasing. And as we can see here, look at the unemployment rate. We can see that it's actually decreased from a whopping 4.5 to 4.3. However, if you're in doubt and you want to zoom out, this is the unemployment rate since July 2023. Went from 3.5, 3.7, a little bit of reduction, and we're at 3.9, and then we're going up to a little bit more here, 4.2, 4.2, 4.3, down up to 4.5, and then we go here. So people are saying, well, stagflation, not a big deal. And this is where we're at, actually. However, we all know that there are some problems in the work sector, especially with AI and especially with layoffs coming in. So the notion of stagflation will continue. Now, what does that mean for the markets? Because we are not in officially stagflation. That's why we call it Stagflation-LITE. Well, for rates themselves, we can see that when you have this situation where inflation is going up and the economy essentially is going down, that puts Jerome Powell in a very tough spot. Because if he actually cuts rates, that means that unfortunately, the inflation usually will go higher. So he can't do that. But unfortunately, to stimulate the economy, you usually would cut rates. And this is probably the worst scenario you want to be in for the Fed chair, that is Jerome Powell. And because of that, we're looking at 96% of now cuts in 18th of March for the next meeting. However, anything is on the table, but that's what we have as far as the economy. What does that mean for our sector? Well, it's pretty much a mixed bag. And there is one more piece of this puzzle, tariffs. Looks like the Trump administration, the Supreme Court, just struck down Trump's sweeping tariffs, meaning that he allegedly cannot use them anymore, and he was using them illegally. However, Scott Bessent, Treasury Secretary, comes on to say, no, that's not true. We're going to do it this way. Just take a listen to this. This was just released, a couple hours ago or so.
Also like to take a moment to address today's Supreme Court ruling, and I would note that I did not change a single word in my speech post the ruling. President Trump will always put our national security and Americans first. And as I have said before, the president has multiple tools in his toolbox. Let's be clear about what today's ruling was and what it wasn't. Despite the misplaced gloating from Democrats, ill-informed media outlets and the very people who gutted our industrial base, the court did not rule against President Trump's tariffs. 6 justices simply ruled that IEEPA authorities cannot be used to raise even $1 of revenue. This administration will invoke alternative legal authorities to replace the IEEPA tariffs. We will be leveraging Section 232 and Section 301 tariff authorities that have been validated through thousands of legal challenges. Treasury's estimates show that the use of Section 122 authority, combined with potentially enhanced Section 232 and Section 301 tariffs, will result in virtually unchanged tariff revenue in 2026.
So that's straight from the mouth of the Treasury Secretary, Scott Bessent. So it looks like tariffs are not going to slow down. And there was actually a press conference where Trump even said he would be putting an additional 10% on those tariffs. So we'll see where that all leads. So this would look at us and say, well, what does that mean for us? What does that mean for us, the crypto investor? It's a mixed bag, I got to be honest with you. And this is quite interesting because we see some discrepancies. First of all, this is from Look On Chain. Looks like Tom Lee from FundStrat and CEO of BitMine. They just bought another 10,000 Ethereum, roughly for $20 million from Kraken 2 hours ago. You can see it went from hot wallet to their wallet. I find that interesting because BitMine itself has been struggling for a little bit. But if you take a look over the stock price over a year, it's actually pretty stable as opposed to, say, MicroStrategy. So I have to give a tip of the hat to Tom Lee for being that stoic and going in full force and buying more Ethereum for his digital asset treasury. So good on you, Tom Lee, keeping the market afloat. Also, I found this interesting as well. Usually when we see a price reduction massively like we have, again, we've seen a 50% plus reduction in over 4 months since October 26th. We can see that usually what happens is Bitcoin miners will turn off their Bitcoin miners, which did happen. But again, conflicting signals. Bitcoin difficulty just jumped 15%, largest increase since 2021, despite a price jump. We can see here that there was quite a drop from the high in October. Of course, as the price goes up, more Bitcoin miners want to compete. But then at some point, they're like, we really can't compete. We're going to shut off, especially as we see slumping prices like, hey, I can't keep up with this. I'm trying to sell my Bitcoin all day long. And the price of the cost of production is actually too high for me. And even though there's a price of Bitcoin reducing, I still have to pay the same for electricity. I still have to pay the same for the storage space. I still have to pay the same for upgrading my miners and everything else. But the price of Bitcoin goes down, I'm out. I'm out for this point in time, and that's what happens. However, as the price has gone down, we saw a 15% bump in Bitcoin miners turning everything back on. That's the beauty of difficulty adjustment. I thought about this, and I'm like, that's a very odd thing. Usually this doesn't happen. Usually it goes the exact opposite way, and it kind of goes down throughout the bear market. However, a major factor behind the recent decline in Bitcoin's hash rate is that several publicly listed mining companies are reallocating energy and computing capacity toward AI and high-performance computing data centers. Bitfarms recently announced a rebrand that removes the Bitcoin identity from its name as it increases its focus on AI infrastructure. And then Riot Platforms has been urged to expand further into AI data center operations. I left this in to make a point, and the point is these Bitcoin miners aren't just switching off the Bitcoin mining operation and just starting to use it for compute, for AI. You can't do that for specific miners. What they're doing is they're saying, look, we have a massive factory. If you want to use this for your devices, you can share it with us, and we can expand that, and we can go for those AI computational mainframes and use all the chips that you guys want to. We can run out the space. We also have electricity, but they're not shutting down their miners per se to help with compute. It's just they're giving up the space and they're getting into AI. And for me, I got to tell you, that's a pretty solid play because you want to diversify. What that does, they shut down, and the other miners are like, cool, you guys are going to shut down? That's fine. We're going to fire it back up. And now here we go. And that's the beauty of Bitcoin miners in the background. Anyhow, the whole point of it is it's just interesting that as the price goes down, we see a bump or 15% increase in Bitcoin mining production. So let me just think about that in the comments section. And then finishing up and rounding out, I think this is a bigger play. Clarity Act. This is from Bull Theory. Great X account to follow. They state White House has set a March 1st deadline to move the crypto market structure bill forward. Here's the thing. We lost. Sorry. So what happened was we wanted yield on stable coins. And Brian Armstrong came out from Coinbase, CEO, and he said, look, we have to give people yield on their stable coins. It's kind of like a money market. I know you guys don't want to do it. You think you're going to lose market share. You're not going to. We're going to work together. But this is a sticking point. We just really can't budge. Bank said, hold my beer, and we're going to fight you tooth and nail until you give up. They gave up. So what's happening here is they're like, fine, we're not going to get the yield on it. Let's just move this forward. And here we are. The draft makes it clear that firms will not be allowed to offer rewards simply for holding stable coins. The savings account style yield model is effectively off the table, which is a bummer, because you would think to yourself, you know, this is a free market, is it not? You would think that any organization could offer some type of yield. And we're not talking like 20%, we're talking like 3.5%, 4%, just to hold things in stable coins. It's better to hold things in stable coins, especially if you want to get into crypto and digital assets. Also, if you want to do micropayments and stuff like that. Bank said no. White House stepped in, said, look, we got to get this going, so let's just make a concession. It looks like that's what's happening. However, I think behind the scenes, there's probably something that the exchanges can do to get yield moving forward, but this is where we're at. Debate has narrowed to whether rewards can be allowed only when tied to specific activities, such as lending or other structured use. The draft also gives the SEC, Treasury, and CFTC the power to enforce the ban on idle stablecoin yield with penalties up to $500,000 per violation per day. Meaning, if you are an exchange or you have some kind of special structure as a bank, and you say, hey, we're going to give you some type of positive yield for your stablecoins, the looks like, I don't know, it's the CFTC or the OCC, they're going to give you penalties of $500,000 per person or per violation per day, so probably not going to have that. However, the broader market structure bill is still viewed as positive for crypto overall. I happen to agree. We just lost in this one part. So unfortunately, we may have lost the battle, but it looks like we won the war. It aims to create clearer rules and around custody, exchange oversight, token classification, the roles of the SEC and CFTC, and gives them clear guidance. A formal framework would reduce regulatory uncertainty that has limited institutional participation. And what this comes down to is this. If they do this for March 1st and they say, great, we can move forward, it's already passed the House of Representatives. In America, we have the House, we have Senate, that essentially makes up the Congress. It has to then go through the Senate Banking Committee. They have to approve it. Then it gets voted on by the Senate. And once that happens, then it goes to the president's desk, and he is going to sign it. So even though it says March 1st, expect that to happen sometime in April. And if we get that passed, that'd be a nice little rally for the crypto digital asset market. I think it's super bullish, but we'll see how it works out. And then to round everything out, there's a couple things. Tether. Actually, this one's kind of, that's a little goofy of a article. And the reason why I put this in is because I want people to, you know, when you're thinking about these things in these news articles, remember there's always sides to every story. Tether supply set for the biggest monthly decline since 2022. Now, you know what? This is a dumb article. And all it really talks about is how the stablecoin has gone down these last 2 months, and it's really so much so-so. And the only thing was this. If you just take a look at the stablecoin market, the total market cap of stablecoins across all exchanges has risen 2.3%. Just look from 2021 to 2026. The only thing we can say here is, I guess, yeah, it dipped a little bit, not a big deal, but look how much stablecoins have grown. Now that I think is amazing and where we should actually be. And lastly, this is good news because this is where I've always seen the market is going. Shutdowns and collusion. Parsec shuts down amid ongoing crypto market volatility. Why is this good? I'll tell you why it's good. It's good because a lot of these companies, a lot of these projects are trash anyhow. Not that they're trash, I shouldn't say that. They've outlived their usefulness. And they really need to come together, and the developers and the teams and the ones that make them great to kind of come together and actually lift up actually better projects, better communities that actually can do something and go far. NFTs aren't going they're not going to go anyplace, not for a while. So this is why Parsec shut down. Sheehan, I think it's the head of the Parsecs, added that Parsec's primary focus on DeFi and NFTs fell out of step with the industry where it now headed. Post FTX DeFi spot lending leverage never really came back in the same way. It changed, morphed into something we understand less. NFT sales reached 5 billion in 2025. It's pretty good, but it's down 37% from almost 9 billion in 2024. And the whole thing is this: crypto is heading for consolidation. CEO of bullish exchange Tom Farley predicted during an interview with CNBC, industry will see a significant consolidation in the coming months, with more projects snapped up by larger companies, which may lead to a much less fragmented sector overall. And I think this is how we move forward. We shut down the projects that don't really work too well. We have those developers, those team members join other team members and make some super great crypto project that actually do something and has real world utility. And they have the people behind it instead of being fragmented among 10,000 different projects. And that's it for today. So look, if you like today's video, give it a thumbs up, consider subscribing. Here we talk about is relatively time sensitive. Now let's get into a little Q&A, answer all your questions, and we'll get out of here for the weekend. Let's see, what do we got? Good afternoon from Utah. What's up, GM? Good morning, wow. Here in Puerto Rico, it's winding down, almost 6 o'clock. That changes everything. So Plato says, section 122 and 332 and 301. Well, you should have said it. Yeah, the whole thing with Trump tariffs, they're like, okay, well, you're going to shut that down. We'll just use another part of the code and we'll keep going business as usual. And I don't know. So we'll see. Smash a like. Stagflation, not the cost of living. Very true. ADA isn't in the top 10 anymore. Yeah, it's a shame. You know, it was a good run. I thought we'd do pretty well, but some good things must come to an end, and that's pretty much it. Daniel says, bull or no bull? Right now, it's bear for sure. Bear market for a while, and I don't see it reversing anytime soon. I think that the Clarity Act could help, that is for sure. But I mean, we have to see what happens with the economy itself. We keep getting inflation going up, which if you look at trueflation, it's going the exact opposite way. So I don't know if it's, you know, the Fed just looking in the rearview mirror, looking at old data, and they're kind of going that way. But it's very odd that you have some place like trueflation, which can get 300, 500 different data points, and they get that instantaneously or either daily or weekly, and they can pull that data in. And this is from, like, you know, little places like Amazon, Target, the Walmarts, the world, and different data centers. And they can get all this information, you know, just a streamlined type of it. And yet the Fed is just doing surveys on phones, and they're like, yeah, inflation's up. I guess so. And people say, well, of course inflation's up, because in my sector, or in my place where I live, you know, this is up and that is up. Look, inflation is always going to go up. It's year over year. It's not like the government's like, hey, we should just stop printing money. Actually, let's retract that money. Let's do more quantitative tightening. They're not doing that. What's happening is the price of goods and services will go up. But are they going to go up by, you know, 2.9345%? Are they going to go up by 1.8%? That's what it comes down to. Sadvi says, Charles took too long to try to pull Cardano out of FUD hell. It's great. It's getting, oh, they decided to actually put a stable coin on Cardano, but maybe it's a little delayed. And I know there's a stable coin that Cardano natively had, but the volume is like, I want to say $3. I'm just kidding. It's very abysmal. They should have done it a long time ago. And hey, it's just a business. Just a business. Is America great yet? America's always great. Thank you. Let's see. Yeah. I always want to move to Uruguay, South American. Why not, Rusty? You can do whatever you want to. Rusty's been around for a long time. He's probably doing quite well. Let's launch an unstable coin that acts like SGOV. slowly builds value and compounds every month, resets to $1 in the first month. It's a pretty good idea. That sounds like most of my altcoins. So let's see. Bear until after midterms and Clarity Act. Bodan's probably right. Midterm year is coming. This is the year. We get elections, I believe, in November. Correct me in the comments section. So, yeah. And the economy has to be super strong going into Q3, into Q4. Because if not, the Republicans are going to lose massive amounts of chairs, positions in the House and probably the Senate. Well, maybe not the Senate. The House for sure. They're going to lose. They're going to lose big. So the administration is probably going to pump as much as they possibly can into the economy. And if that means a little money printing, so be it. So we'll see when the new Fed chair takes over what he's going to do. We'll see. It's been interesting times, that's for sure. Rob, if the administration stopped tariffs, don't you think inflation would drop and then the Fed would drop interest rates? What is a question like how long have these tariffs been going on for? I want to say over a year, right? And it seems like we haven't seen like the 3-4% or whatever people were saying is going to happen. But every time we get a high print, people say it's the tariffs. And every time we get a low print, we say the data is wrong. So it's anybody's guess, but some economists say that the tariffs are inflationary, and some say that they are not. I think the person that gives a pretty good discussion with that is Pompliano. He talks about how it is not, and of course you watch somebody else, and definitely it is. It's anybody's guess. Patiently wait for the bottom. That's the way to do it. Yeah, Rob, I swear you and James coordinate live streams every Friday. These things happen. Just a year for tariffs. See, a year. It's a long time. And you think it would crash everything, but here we are. Tariffs have pulled some countries' hands and forced them to build on U.S. soil. It's also very true. So it just depends. It just depends on which data you look at. And regardless, it looks like it's going to continue. So I guess we get to see if it is inflationary or not. And then we'll go from there. Of course, it'll be the same thing. If inflation goes down, we'll say those numbers are full of it. And if inflation goes up, we'll see it's that problem. And the cycle continues. I care enough to look at it just to see where my bag is going to go. That's pretty much it. So we'll see how it works out. But I expect some choppiness, and I expect a lot of volatility March and April. And probably us going below 60K for Bitcoin, probably in the 55s yet again. Some people say we've already bottomed out, but I don't believe that. I mean, we haven't even touched the 200-week moving average. I think we got till 55K for that. So good luck. Anyhow, that's it for tonight, everybody. Thanks so much for stopping by. Like and subscribe, and I'll see you guys on the next one. Adios.